So I'm going to go into Asian history. As a kid, my parents traveled a lot. My dad had various different projects. He was a mining engineer, and we traveled a lot, lived in different parts of the world. I love traveling, so I decided that I want to do something with travel, tourism in my life. And I was fortunate enough, I got a scholarship. I joined the hotel school in 1994. And I was going on a full path of, being in hotel operations. That's what I was going to do. I was going to be a general manager of a hotel. And then about halfway through, I started taking finance classes within the hotel school. And one thing led to another. I got an internship. The hotel school had a great program at the time. I think it still exists, management intern program, MIP, where they let you take a whole semester off, get credit for it, and work in the industry. And I joined, was fortunate enough to join a firm called LaSalle Hotel Properties. I spent 8-9 months there working actually on the financing side of the industry, of the hotel industry, and I loved it. Sort of the passion was born there. I still remember, I worked on one project that spent the entire 6 months. It was a hotel, I think it was a Meridian Hotel in Dallas or Fort Worth. And so I sort of remember first time walking the hotel, but not thinking about the operations, but considering the operations was still part of the business, but actually thinking, numbers, finance, and it really clicked with me. So after graduation, I decided to go into the real estate industry. Spent a few years in investment banking at Donaldson, Lufkin & Jenrette when they still existed. And then left with one of my MDs who started a development firm and really got a hands-on experience in real estate versus just corporate real estate and numbers, more like developing a project and getting sort of to the bricks and mortar, to the architectural design plans, numbers. It was a fascinating project in New York, but it taught me a lot because, so that thing didn't work out. After 6 months, we had to do a full job, but that project that we worked on is still being worked on 20 years later with city zoning and all that. So it's sometimes it could be a hard process. So then I went through a little bit of a period where, I burned out. I hated real estate for a while. So I looked for to continue investing career outside of real estate, and I found home in lending. Investing capital to corporations in the US and abroad, but in the form of debt capital. I joined a firm called Oaktree, and I was there for a number of years, really learning and how to view companies through the lens of risk mitigation. And at some point I realized, I think there are people out there that their brain works more on, what can this be? What's the future potential of this? And there are people out there that really are more focused, like, what can go wrong with this? And sort of that's the first thing you think about. And you realize you're better suited for one or the other, and that's how your DNA is just structured. So I stayed in investing in credit for a long time. After a number of years, I had an opportunity to join Highbridge Principal Strategies that was started as part of an investment firm called Highbridge to invest in private credit. So the same thing I was doing at Oaktree. And I joined in 2008. We were fortunate enough and successful in developing a good investor base, making good investment, still no real estate. And then in 2012, so about 3.5 years ago, we were reviewing opportunities of investing capital, and it just struck us that at the time, the corporate markets were pretty busy, yields were pretty low, and some of the best developers out there couldn't find capital to build or to improve their real estate. So I kind of went back to my roots, called a few old contacts, and started to do the research on the industry. And long story short, I ended up creating a real estate business within Highbridge. We did it originally in a joint venture with the related companies. who I had met back in 1998 when I started, so sort of a full circle. And now we still work with the related companies. Actually, we're integrating even further, but we have a pretty broad business in the US, Europe, in financing real estate in transition. So anything from taking a piece of land and building on it to a smaller transition, like taking a hotel that's, hasn't had much capital invested in, refurbishing it and making it better. And what I love about this is I finally realized after all these years that I like the intersection point of finance, investment, and creativity. And then you have that in real estate. You're making a permanent, you're leaving a permanent footprint in cities. Depending on which architect, which design you choose for this building, it's likely going to be there for a long time. And it's exciting. We go through this process. We have 5 or 6 designs, and you go through that. You have to look at it through the lens of what makes sense, what's feasible, but you also look at it through, do I like this? Do I want this to be there for a long time? So. Very spot-on question, because as we look at investments, and this goes beyond real estate even, when we looked at investments in corporate companies, whether it's, we've done investments from parking lot companies to airport F&B operators to garbage companies, well, they call themselves waste management. So you look at across the board and you team up with management teams and entrepreneurs, and the biggest difference of success is usually the management team. The management team, the sponsor, the operations team. And you look, I personally look for knowledgeable people, but also humble, meaning people that know what they don't know and have an idea of how to, get the answers to those questions. Obviously, there are a number of sponsors that we work with that over time we have incredible confidence in, that they know how to navigate issues in real estate development or real estate ownership, and that even if they don't know some specific nuance, they'll figure it out. So you sort of have that trust that you develop over the years. But there's a lot of real estate owners out there that are sort of hobbyists. They kind of thought it would be cool to build a building in here, and got some capital from friends and family, and you look at some of these projects, and look, we've done some of those, and you learn that the knowledge and experience and sort of focus really makes a difference. What we typically invest in is what I find a very interesting part of the capital structure. Typically, in a very simplified way, I'm sure you guys know, a developer, gets a little bit of equity, and from equity sources their own capital. Then they source senior debt from a bank, construction loan, and there's usually a pretty big gap between how much money the equity has to put in and how little money the bank wants to give them. And that's where our investment vehicle comes in. It's called, we do other things, but mostly we provide the mezzanine, sort of. We sit in between. We can't totally ignore the downside risk. We're kind of close to the equity. We get paid more than the senior lenders. But it's, we earn more than them, and we're taking more risk. So sort of in between, we have to consider the risk, we have to consider the upside. So when we are approached, I have a team in both the US and Europe, so we have a good perspective on what we want and what we don't want to do in the market. And sometimes we have a view that in this time period, in this region, we will not do X, Y, and Z type of properties. If it meets sort of our criteria, we end up investing a lot of effort. Our teams are small, and a project always takes a lot of effort, and I go through in a presentation through all the steps we take to underwrite a transaction. And it takes 3 or 4 guys out of commission for a while. So we need to be very selective. We need to know that this is the project we want to put the team on, because we have a very small team, and them spending 3 months on something means that they're not spending 3 months with something else. I actually think the market is very interesting, very attractive. And so there has been, I always look at things sort of in a longer term perspective. And if you look at the changes in the marketplace over the last 07, 08, so call it 8, 9 years, there's structural and long-term changes. So yes, today you do have more providers of mezzanine capital than you had before. However, what you do not have anymore is all the regulatory changes that we all experienced since 2008 and 9. They have put substantial hurdles on the banks to participate in the financing market for real estate development or real estate improvement. There is essentially what it comes down to, new regulations are forcing banks to reserve more capital against development projects. And as a result, that's making this less attractive to them. And if you look at, and we've done various analysis and charts, if you look at 2007, what portion of real estate development debt was held by banks, it was something like half of it, 40-something%. And there are different charts, so the numbers can be all over the place. Today, it's 16%. So banks have pulled out significantly from that marketplace. Similarly, you have the CMBS market that back in 07 was going gangbusters, probably caused a lot of the problems we have today, disappeared, started to coming back slowly, but even at its height in the middle of last year, height since the recession, it was about 30-40%, maybe half of what it was back then. And the latest round of volatility has really taken that down as well. So while you do have more providers of mezzanine, you have fewer other competitors. You've had some foreign capital starting to come in, but supply of capital for this kind of projects is less than it used to be before, structurally so. And fundamental demand for real estate continues to be there. The economy has continued to grow. We haven't caught up yet with rebuilding the stock, essentially. So I thought the most about that question because there's really no silver bullet here to solve that. You need to, when you said it, work very hard. You need to do that. You need to realize what you're good at and what you're not good at, and be honest with yourself on that. You need to get lucky in terms of be in the right place in the right time. And when you get an opportunity, you need to follow up on that. And it's amazing when you look back at your career, like I do sometimes. I never planned it this way, and it happened organically. One thing led to another that I could have never predicted. But I'm happy where I am.